Welcome. In this video, can Xcn coin giant rise continue? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When we examine the chart in general terms, we notice that the price started to follow a horizontal course by squeezing into a certain region, especially immediately after the recent sharp and voluminous upward movement. This appearance points to a pennant pattern, which is frequently encountered in technical analysis and contains important signals. Pennant patterns are technical formations that indicate the healthy continuation of uptrends and provide valuable information for traders. The formation of this pattern basically starts with a strong upward impulse wave, that is a sharp rise. This spike is usually triggered by positive news flow, strong buying pressure, or an improvement in overall market sentiment. At this point, market participants are heavily positioned to buy, and the price rises significantly in a short period of time. However, no price movement continues in a straight line, so this sharp rise is naturally followed by a consolidation phase. This consolidation process forms the body of the pennant pattern. At this stage, the price starts to move sideways in a narrowing range. On the chart, this structure looks like a triangle or a slightly downward sloping channel. This compression of the price indicates that buyers and sellers are trying to reach an equilibrium point in the market, meaning that a power struggle is going on. Inside such patterns, volume usually decreases as traders wait for the next move. This reduced volume is an additional technical signal that the pattern is healthy. The important thing at this point is that the pennant structure breaks to the upside. In technical analysis, pennant patterns, especially if they form in the middle of an uptrend, usually signal that the current trend will continue. In other words, after the market rests and recharges in this narrow zone, it has the potential to pick up new momentum and resume its upward movement. This breakout usually happens on strong volume, and the breakout candle is upward and stable, confirming that the price can move higher. This also makes sense from a trader psychology point of view. Traders who were unable to enter a position during the initial sharp rise see this consolidation zone as an opportunity. The desire to profit from the continuation of the trend by buying in the area where the price is stuck further strengthens the upside breakout of this pattern. At the same time, the fact that traders who have already taken positions do not panic sell during this period shows that confidence remains and positive expectations in the market are maintained. To summarize, the pennant pattern we observe on the chart at this point represents a healthy resting phase following a strong trend. These areas where the price gets stuck and temporarily loses momentum are often seen as a staging area for the next strong move. And if technical patterns are read correctly, they can offer traders great opportunities. Therefore, such patterns are an important guide not only for short-term but also for medium and long-term investment decisions. But we need to look not only at patterns, but also at other metrics. Stay tuned. When we take a look at the current structure on the chart, we can easily see that there is a very important resistance level that attracts attention, especially in the upper regions. One of the main reasons why this level is technically important is that in the past, when the price came to this area, it could not sustain its upward movement and retreated significantly from this point. In other words, this has been an area where the power of buyers has been insufficient, and sellers have stepped in and become the dominant side. Such levels are considered as profit realization zones by investors in technical analysis. Therefore, when the price approaches this level again, the probability of similar scenarios repeating increases. Currently, the price is showing an upward trend and is approaching this resistance level. If this movement continues, it seems highly likely that the price will reach this zone. However, there are many factors to consider at this point. Foremost among them is the fact that the breakout of this resistance should not only be accompanied by the price reaching this area, but also by strong volume support. This is because many technical analysts know that volumeless breakouts are usually not permanent, and the price will fall back below that area. This means a fake breakout, which can trap traders. On the other hand, if the price makes a decisive breakout with volume, when it hits that resistance point, this is considered a very positive signal. In such a case, that resistance zone may turn into a technical support zone, and even if the price returns to it after a while, this level may not be easily crossed downwards. This transformation indicates that buyers have taken control of the market, and the uptrend continues in a healthy manner. However, it should be noted that when the price reaches this level, there is almost always some profit realization. This is because many investors see such clear resistance zones as selling opportunities and may close their positions. In this case, the price will pause in that area and may even retrace. However, the size of this pullback depends on the general trend in the market. If the market is positive and momentum continues, Such corrections are usually short-lived, and then resistance is tested again with a stronger attack. It is important to remember that the resistance zone is not just a technical line. There may be a lot of orders accumulated there, both stop orders and sell orders. Therefore, once this level is reached, the price is in the middle of a psychological and strategic battle. Buyers will increase the pressure to break through this zone, while sellers will try to protect it. If the buyers come out stronger and manage to break through this zone, this will create a serious confidence in the market and trigger new waves of buying. As a result, this important resistance point, which may be encountered by the price if the upward movement continues, has a very decisive position, not only in terms of short-term movements, but also in terms of the continuity of the overall trend. Therefore, price behavior in this area should be carefully monitored, and details such as volume, candlestick patterns, and momentum indicators should be closely followed, especially at the moment of the breakout. When the price hits this resistance, a small profit can be taken for short-termers. As the chart shows, the RSI, or Relative Strength Index, has trended downwards over time in a way that many traders have noticed. This downward trend actually represents a long-standing weakness in buying power in the market. In other words, the RSI's lower highs on each reaction rally were an important signal that buyers were struggling to push prices higher, and that momentum was generally in favor of sellers. However, with the recent price action, we can see that the RSI has broken this falling trend line to the upside. This breakout is a critical development in technical analysis. This is because when a powerful oscillator like the RSI breaks trend lines with historical resistance to the upside, it tells us that the momentum in the market is starting to shift. Such breakouts usually signal a positive trend reversal and often go hand in hand with bullish movements in the price. But one of the most important things to pay attention to is the price behavior that follows this breakout. Currently, the RSI is hovering slightly above the trend line it broke, and looking at it on the chart, it looks like it is preparing to enter a retest. That is, the RSI is preparing to test this trend line, which has worked as resistance in the past, now as support. In technical analysis, this process is called a retest, and it's very important because not only does it need to break a level, but it also needs to test whether that level is working as support. If the RSI returns to this broken trend line and makes a strong bounce off it, this is interpreted as a very positive technical signal. Such a move strengthens the bullish expectation not only for the RSI, but also for the price chart. This is because it indicates that momentum is picking up again, the appetite for buying in the market is increasing, and the start of a new bullish wave may be in the offing. What's more, this movement of the RSI may also herald a bullish trend on the price chart. Such strong RSI breakouts and subsequent successful retests usually cause the price to break through resistance levels and reach new highs. Of course, there is another scenario to be considered here. If the RSI dips back below the trend line it broke during the retest phase and stays there, then there is a possibility that this breakout is a temporary or fake move. In such a case, market confidence could be damaged, and investors may become more cautious. However, the current outlook suggests that the RSI is gaining strength and is attempting to return to this trend line and confirm it as a new support. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.